Are you worried about how to manage your wealth without any money woes? Here we come to your rescue. In the inaugural podcast series of Policybazaar.ae at Insurance Insights, today we have with us our CEO, Mr. Neeraj Gupta. Owing to a rich industry experience, Neeraj would share some useful insights on how the expat population in UAE can take charge of their financial health. Dubai is a city of pure consumerism. Moreover, it is stereotyped for its lavish lifestyle, and that is no coincidence. According to a recent research by Hoxton Capital Management, it has been revealed that up to 85% of expats living in the region are not saving enough for their future. While expatriates comprise 89% of the UAE population, may they benefit from improved salaries, they aren't necessarily making the most of their increased earnings. Before it becomes too late, expats need to understand that saving and investing money is key to providing themselves with security against an unpredictable future. Both savings and investments are an integral part of a financial plan. Saving provides a safety net for unexpected expenses, while investing helps them build wealth. These little actions can ensure expats in the region have peace of mind and assist them in becoming financially independent. Thanks for joining us, Neeraj. We look forward to indulging with you in an interesting conversation by throwing some light on how the expats can safeguard their financial future. In the wake of uncertain political and economic changes, Neeraj, can you tell our listeners some realistic tips that can help them to future-proof their finances by inculcating the habit of saving?
The couple of things I can guide on is first, note down your expenses. Now, that will help you classify your expenses into different buckets. For example, housing, telecom, education, personal expenses, and all that, right? Now, so define an amount of money basis that you will need if you were not earning for next 6 months. Let's call that as a corpus, right? This is the corpus you need. Now, if you already have that corpus, great. If you do not have that corpus, now define how much money, and you want to build this corpus as soon as possible, right? So define an amount of money that you're going to keep aside every month to build that corpus. Now you start building that corpus. Once you build that corpus, now continue to put in this money again in your corpus. That will help you see this corpus grow significantly over the years. The other thing that you can also do is allocate a separate bank account through which you will do your expenses. So, the moment you get your salaries, what you should do is break that, as we've done in the first list of noting down the expenses. Keep that money and put it into your expense account, and you will do all expenses through that account. That will help you get more rational about how do you spend money. And that is the best form. See, you can't build savings overnight. You will have to do that steadily over a period of time.
Before saving, it is often better to eliminate high interest debt, which can cost hundreds or even thousands of dirhams every month. Please share your expert advice with our expat population about how they can manage their debts efficiently.
Eliminating short-term debt, which is typically a very high interest debt, is very, very critical. See, we see a lot of people getting enticed by those credit card offers where you can make the minimum payment and keep on rotating. You would be surprised that the interest costs on those are almost as high as anywhere between 32 or 40%, which means over the next 12 months, whatever you paid or whatever you've consumed, you'll literally be paying almost 40-50% of that additional as only interest. So those interests are obnoxiously high. So for example, at best, you would have your capital giving you returns of 10-15% and you're paying interest costs at 35-40% annually, which means you are operating at a negative return. This is unsustainable. So as a result, what you should definitely do is eliminate the high cost debt that you have, especially by revolving your credit cards or your personal loans. The best way to do that is start parking out certain money every month to cover up the capital, not only the interest component, but cover up the capital that you've taken, so that you can reduce the capital. As a result, your interest payments will go down. Once you've done that, that is the time then you start investing and saving money.
What financial mistakes would you highlight for expats that they should refrain from so that their financial future doesn't get affected?
So a lot of people move to UAE to save money so that once they retire or something, they have a huge corpus and they can go back to their home country probably and live a decent life. But the surprising part is a lot of people who come here to save money once they leave, they somehow have not been able to do that. And the reason for that primarily is you get enticed with whatever you see outside, right? So you need to be very clear on what your incomes are and what expenses you can cover, right? So you need not get enticed by the offers which are running. You need to genuinely believe is whatever product or whatever you're spending on, is it really useful for you? So, for example, let me put it this way: you might see you have a decent phone and a new phone gets launched. But now, does that phone really help solve a utility? Obviously, if you can afford it, please go ahead and buy it. But if you're buying it and postponing some of your investment decisions, some of your saving decisions, or you're cutting down on your savings to do that, then that is not the way to do it. For all type of expenses, you should put aside money every month and basis that decide on where to spend that. uh, but what I typically see in this region is a lot of people get enticed by the easy availability of loans and credit, which at times is much more beyond their means. So we should avoid that.
Please explain to our listeners what is the importance of maintaining a good credit score. Also, share some strategies following this expats can improve their credit score.
Credit score essentially helps any financial institution determine how credit worthy are you as a consumer. What that essentially means is if they give you a line of credit, it could be a loan or it could be a credit card, how likely are you not to default on that, right? That is what essentially a credit score does. A credit score also tells the bank how credit hungry you are, which means how much you live your life on credits by using loans or by using your credit card limits, right? So, credit score essentially tells a bank a lot about how safe this consumer is. And couple of ways to do that is try and not to revolve too much of your credit card amount. So, pay and settle the credit card amount to the full. Do it before the last day so that there are no defaults recorded in the system. Try and manage the limit of the credit card so that you do not go above so for example 70-80% of your credit card limits in a month. The more percentage of the credit card you use, the lower your credit score would be. So a person who uses 100% of the credit card limit in comparison to a person who uses 50% credit card limit, a person who uses 50% credit card limit will have a better score.
Thank you so much for sharing such useful insights, Neeraj. I am sure our listeners will work on the tips and advice shared by you today to improve their financial situation over time.